So, hello. This is a daily recap video. It's the first of its kind, and we're gonna look back at Thursday, the 11th of December 2025, and see how we could have traded that with my trading logic. And yeah, we just see where we go. So first of all, framing the day. What can we see? We had here a daily level. Okay, so this daily level was like so, and well, you have to bear that the price is actually still moving because it is Friday and the markets are open. What we have seen so far is that we are going higher and higher and higher. So while we go higher, we are always looking at the closes below that they might be getting wicked on. Okay. So then on the 4 hour, had a order block here. Okay. So that's that. That is an order block, and up here there is a 4 hour level. So then we come back down to the 1 hour, and well, price didn't go any lower than this, so we can be looking at, well, there was a 1 hour here by the time where you can see here the dark background is the overnight session, which is Asia and London, and then here the black area is New York. So we're only looking at trades within New York for this exercise. So over Asia, we see, first of all, this was the previous day FOMC rate cut pumped nicely up, and then the following Asia session just completely dumped down. London moved back up, and New York went down and up. So, but what are the trades that we can do in there? So there's this 1 hour level, but so the thing is, we are not trading these levels when they don't break structure. Okay, so this level has not broken any structure. There is no structure point here, so that's why, as you can see, it is irrelevant. And it was irrelevant for the market. Whereas, for example, this 4 hour order block, well, that has broken structure here. So you can see there is way more respect there. Similarly, you could see that here's an order block that has broken structure. So this one is more important than that one yesterday. So we remove this, because there is no criteria fulfilled. 30 minutes, we're not taking any 30 minutes here. 15 minute, equally, it all just ends up being all part of this leg down. And as we know, such legs without a step here, this would be the highest step, but because it's so high up, I don't see it as very relevant. It is different to here a step here. This is more relevant. As you can see, we put in a higher low and then we continue higher. I mean, this is again the FOMC pump, but this step being so much lower down in price compared to this one, which makes this fairly, well, you could say we have broken this step, we have closed above, and we have put in a higher low as compared to here, and we have broken the highs once more. So from that sense, we have fulfilled the criteria where we don't take this low anymore. We came close, but we didn't take it. So, but we are trading on the 1 and 5 minute. So New York opens and completely sells off, and here is our first step. we are dipping into our 4-hour order block after we take all of this liquidity here. There's the liquidity. We get a perfect reaction here of taking the liquidity, being at the very lows without taking the low, because after all you have broken steps here. Okay. And well, what do you see? This would have been a trade. Unfortunately, it's not a trade for me. Because, well, first of all, the risk reward 2.5 is okay, but I would have to be very confident that you get a 170 point move. And, well, I'm just not really planning for 170 point moves. But as you can see, it would have worked out. As soon as you see the bullish engulfing, after dipping at the very lows, you could have entered and it would have worked. However, so 5-minute logic, we are breaking a step. After we break a step, we would expect a higher low. This one gets protected, this one gets taken. So we would be looking for a secondary step where people are trapped. And that would be here. Here is another yellow candle. We convincingly close above and we put in the higher low, we protect this one and we're moving higher. So this construct would say this low gets taken, but because it's the second time a step gets broken, you can equally target the overall high. Yeah, so that would be a setup that you can take. Let's see, did we get all the way to the close of this 5 minute? Oh my god, let's see. This close is at 467.25 and the low is 467. You would have just been tagged by a tick. Okay, the most obvious, no, not obvious, the most perfect entry at the 5-minute close after you have broken the 5-minute structure. Both of them, both yellow candles were broken. You put in a higher low. So this is a common thing where price moves all the way to the 50 and rejects, moves to the 50 and rejects. But here you have a higher low, you don't take that one. Here you have a higher low, you don't take that one. So that's what you can put into your trading logic, where you say, if I see a break-in structure, I don't FOMO into the move, because most likely this is the very high of the move. But I wait for a retracement and I wait for the exact same thing happen again. And well, either you trade with fibs, where you just say, well, I'm going to enter at the 7.5 retracement with a stop loss below and I take these highs. This is a nice 4R. Or what I like to do is I take the actual yellow candle that was broken and I enter at the middle. So I enter at the lower end of that candle. So let's see, probably you end up being very similar here. Yeah, in this case it's very similar. The 7.5 matches the middle of that candle. And if you're really confident, you enter at the close, but that one is, I would say, the rarest of events that happens. But could you have pulled off this? Yes. You just need the same logic again, right? Okay, so that is step number 1, you have taken liquidity. Step number 2, you have broken a 5-minute step. It is only up here where it does get broken. Step number 3, you have seen that exact same thing again. Break structure here convincingly. And step number 4, this would be your trade entry. Somewhere here. You can also wait for the candle to close, just to make another green candle here. And you then enter. Doesn't really matter. So that was a perfect 5-minute trade setup. Market open 2:30. So at 5 you would have been in. So let's see, from here to getting there, that trade duration is, where are we, this candle here, 30 minutes. So this is a 30-minute trade from entering to taking profit. It's also a 1 candle entry, and after the first candle there is no more retouch, so there's no more wick, and then go. It's just enter, and it would have worked. Nice little 4-hour trade here. So then, trade logic number 2 is, well, the same thing again. We are waiting for a 5-minute candle to be breached. So here we have 2 5-minute candles, and we are not looking at this as, oh, this is a double top, oh, so bad. But we are looking for, when we close higher, we want to long the yellow candle. So here you have a yellow candle. You wick onto it, but you never get a close above, okay? So therefore there is no trade. Then you end up with a second opportunity, and this one is literally the one that you can take. Stop loss below there, and take profit is technically just above here, or, well, I like to target 3R trades. So in this case was also a 1 candle entry, and yeah, it is perfect. It's not. So the trade logic is, if you close above a yellow candle, it generally comes back for a retest, and you can trade a 3R from it. You take the yellow candle as a stop loss measurement. As you can see from a line chart, it's just, you would assume a higher low, and that's exactly what it does. Similarly down here, you have broken the structure higher, so you assume a higher low, and that low should not be taken anymore, which is conveniently very often the low of a yellow candle. So that's that. And then, well, ultimately you have an end of day pumperoni, and that is, interestingly, are we touching this one? Just not. You're not touching the top of this white one, but this is again a slow and controlled retracement, and as soon as you, well, in this case, as soon as you close above, I mean, there is not, oh damn, no, you cannot even take that trade on if you trade prop firms. Yeah, so we leave it there. You see, after hours it does still go higher. You can only trade that if the prop firm allows you to trade it, but you would have entered here, stop loss below the yellow candle, and, well, let's see, a 3R. You still get a 3R out of it. So always look at, you put your stop loss below the yellow candle. In this case, there is a yellow and a white one, both at the same level, and it coincides with the green 5-minute candle as well. So that very often happens. Okay, so those were that was 1 successful trade, 2 successful trades, and well, this one is questionable if you could take it depending on your prop firm. Okie dokie. So that's the 5 minute. What else do we have? This one here. Now let's look at the 1 minute. The 1 minute, less of a retouch, more of a market entry kind of situation. But the same thing here. On this leg down, we see there's a step here, step there, and then ultimately the last step here. So you could have entered at this candle because you have broken a step very convincingly, but the ultimate entry would be after you break your step, your yellow step. Okay, so this is where you enter, this is where you put your stop loss, and then, well, 3R, 140 points, yes, and it's a 47 point stop loss, which is quite more than I would usually take, but hey, you would get a nice retouch here. So you get shorters, which instantly get invalidated, but thanks to retouch rules, you will get your entry and stop loss below, well, choose which one you want, below the yellow or below the longer wick. In this case, even if you do the longer wick, you can get a 3R out of it. And this trade, well, it only takes 8 minutes. 8 minutes until take profit. And this is where the next yellow candles appear, which then finally give you the turnaround. So this was trade number 1, market entry right here. Trade number 2, retouch. Then on the way down here, this gets tricky. You shall not get fooled around on this one. I was actually shorting here, but that's different setup. Then what else do we see? Here, there we go. So this leg down, here's the step. As soon as you close above it, I mean, it's all systems go, right? Yeah, so that's one. What's the other one? You have another one here where you have a retracement, and this is where you close higher. You do get quite some opportunities here to get into the trade, or you have a secondary entry here where you close higher than the yellow candle, stop loss below the last swing low, and you target a 3R. Would also work. And then the next opportunity, steps down, you close higher. In this case you get a perfect retest of the yellow candle, and well, stop loss below the yellow or the last swing low, target a 3R. Then, well, this is the way up. So now we're looking for a way down. Here, way down. This is the first time where a yellow candle gets violated. Yeah, you can long the retest. In this case, if you chose the yellow candle as a stop loss, you would have gotten wicked out. So in this case, the overall low would have been better. And a 3R, let's see, you get it just at market close. So if you didn't take if you didn't get the market close with it, here are the highs. Yeah, just the last candle. Whoop. If you close at the very last minute, maybe somewhere here. What is that? 2R. Okay, 37 points. So, yeah, that is trade 1, trade 2. There was not really a trade here, but this one, there will be a trade 3. There will be a trade 4. This is the 5th trade. Oh, sorry, not the 5th trade. Here would be, yeah, okay, 4 and 5 is the same trade basically. This is a separate trade, trade 5, and then here trade 6, all longs. Yeah, all revolving around yellow candles. Market enter, retouch. Here market enter after a break of this. There's no retouch. Then here there is a retouch. Market enter after close. Retouch. And this one, well, you can do anything. So, but you could have gotten a 3R out of this wick. So that's that. 6 trades on the 1 minute, and on the 5 minute, what do we say here? Well, basically 1, 2 trades. So 8 trades in total. So this was another 5-minute trade here. And yeah, trade 5 and 6. 5 and this is a 5-minute and a 1-minute trade. So yeah, that's all for today. I hope you have learned something, and I shall catch you on the next one.